What mark?
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls. I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. It sounds like we're having a little bit of technical difficulties here this morning, so we're going to try and see if we can. We're on the new broadcast platform, and we're hoping that that new broadcast platform will get us some good stuff, and you'll be able to chime in. We're having Mitchell is in the studio with us today, helping us out, but we are hoping that we get work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. Looks like we are having a little bit of technical difficulties. Hopefully we will get the broadcasting working out. It's going to take us a little bit of time to get all the bugs out of it. All these issues always happen as we do start going to new broadcast platforms. We try to get things up and running for you. So it's just a little bit of technical issues, but we are watching today, and I'm getting all these hand signals, but I have no clue what some of the hand signals mean. So if you can tell me online if you're seeing what we're showing, if you're hearing us speak, it sure be helpful, because I have no clue how to read hand signals. But that is the broadcast right now. It looks like Mitchell has joined our broadcast. Moving right along, let's continue with our commentary today. We've got some great news for you. We are checking to see what is going on in the markets. We have to find out, which we're celebrating today. We celebrate every day on Ron Siegel Radio. I don't know about this. Today is National Techies Day. I think I've got a sound bite for National Techies Day. Let's see if we can find that. Yeah, not a lot of fun on National Techies Day. National Boyfriend Day. Let's see. We've got National Taco Day is tomorrow. Golf Lovers Day is tomorrow. Vodka Day tomorrow. I think we're going to have to be celebrating all day tomorrow. We may be off air completely. So it sounds like we are working. If you're watching us today, this morning, please let us know if give me a thumbs up if you can hear our broadcast. But it sounds like we are up and running. I got a separate computer here in the studio, and it sounds like we are getting some good signals going through. Hey, let's take a look at what's going on in the markets today. It has been a rocky road already in the markets. And no, we're not talking about the food. Yes, I generally do speak frequently about food, but today the markets have been a rocky road. We saw them down significantly. We saw them up a little bit this morning. Then we saw a huge drop. Dave is with us this morning. Good to see you, Mr. Dave, or Uncle Dave. Then we saw a huge drop in the Dow. Then they came back. So we've been watching that, see what's going on right there. And we got some technical issues going on. We did get some movement from some of the technicals. the reports, the economic. Easy for me to think. While we're trying to get the technical difficulties going, sometimes we also have these other issues where my mind doesn't seem to want to work. So we did find out today that we got some economic data. Service sector numbers not quite as good as they had been, so that's what caused the market to fall. We continue to see numbers falling, and we've been talking to you about this for some time now, about the issues that we're seeing in the marketplace, we're seeing in the economy. Now, here's some numbers, and I'm going to tell you more about this when we get into the mortgage minute in the next segment. But what's causing all of this to happen? Why are we seeing the volatility that we are seeing right now? Why are we seeing this in the marketplace? And I'm going to explain all of that to you shortly. It's fascinating numbers. It's fascinating to watch. If you're a student of these markets, you're going to see what is going on. You're going to hear what's going on. But hey, let's take a look a little bit before we get to that. What is going on globally? One of the big issues, and if you are a country music fan, and I am, the Route 91 concert, that was about a year ago. It was a year ago yesterday, I think, was the exact date of that. Well, it looks like there may be some settlements on the horizon. The attorneys, they don't like to say that there's ever a settlement because they're still always trying to push for more, to get more from the businesses. Now, the business, MGM Entertainment, Mandalay Bay, they are the ones, they initiated about 1,900 lawsuits because they wanted to try and make sure they settled everything in the federal courts in one place, one time. Might end up getting the people maybe some more money, but some of the individuals may not like that. The attorneys don't like that. They wanted to be able to get more money, but it looks like MGM Resorts is set to pay about $800 million. Oh! Yeah, in settlements on that. I don't understand exactly why MGM is liable for this. I guess, but you know something, the settlement might be cheaper than trying to figure it all out and go to court for the whole thing. Just throw that out there for you. They've got $735 million worth of insurance is the last number that I saw. See what if the individuals get any of that, or is all that money going to end up going to attorneys? We're going to watch and see that case. We'll follow that one for you. Also checking out what's going on in the markets. Let's see what our daily briefing has for us today. Tick-tock of disappointing economic indicators continue this morning. Composite Purchasing Managers Index for the Euro area showing growth in the region is stagnating. An even bleaker picture for the UK, where the critical services sector unexpectedly dropped 49.5 dropped to 49.5 for September. Ow! Worse than the lowest estimate from any of the economists surveyed by Bloomberg. Tariff time. If worse than expected data is not enough to make investors cautious, there's also a new round of U.S. tariffs to deal with this morning. U.S. announced a range of extra duties on $7.5 billion of European exports, ranging from 10% to 25%, and hitting items as diverse as whiskey, cheese, and aircraft components. The move does not come as a surprise after the WTO ruled in favor of America in a very long-running dispute over European Union support for its aircraft industry. No new tariffs on parts shipped to the Airbus SE plant in Alabama, with European luxury goods makers breathing a sigh of relief after leather was also omitted from the list. European Trade Commissioner Cecilia Malmström said the bloc is ready to work with the U.S. on a fair and balanced solution.
Surprise, surprise, surprise.
Amazing. President Trump continues to do these things. People continue to complain about them. Yet, however, each time he puts more tariffs on, the other countries seem to keep coming back to the table, as they don't like the idea of the tariffs. They don't want to get back to that even playing field. I guess they feel that if there's an even playing field, the U.S. will be able to compete on any kind of an even playing field. Moving right along in the daily briefing today, President Trump hitting on the former Vice President Biden, talking about that he is a fraud, a crook, a scheme, and his son mysteriously, with no experience, gets boatloads of money from the Ukraine and China. The exact quote from the president, quote, "stone cold crooked," unquote. Also going in the briefing, the whistleblower talked to Adam Schiff, the chairman of the Lack of Intelligence Committee. Unbelievable. Apparently, the whistleblower spoke to the Lack of Intelligence Committee chair Schiff before they filed the report. Wonder if Mr. Schiff actually helped with the report. We don't know that. We won't know that. We're going to find out some of these things. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, 3 signs the housing market is on the rebound. How does a HELOC affect a credit score? 6 steps to pay off debt with a credit card balance. All that and more. You can reach me anytime. Our off-air number, 800-306-1990. 890 or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. On Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO certified credit professional and has helped thousands of people just like establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037 and DRE number 018694552.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel Radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Gold Star Mortgage. When you're ready for that next mortgage, Gold Star has the programs and the products for you. You just need to give us a call at 800-306-1990. 1-800-306-1990. So we have talked to you a little bit, and I'm not getting into all the numbers just because I don't know what time you're going to be listening to our broadcasts. But the market's been a bit volatile morning already today. We've seen the Dow Jones Industrial Average up by a little bit, down by a whole lot. Now it's down by just a little. The S&P 500 pretty flat. NASDAQ up a bit. What is going on? That is the big issue. Well, the one thing that I can tell you for sure, mortgage-backed securities are up as of this hour, which means interest rates are down a bit. The PMI Services Index came out this morning. That's a questionnaire survey collected from over 400 U.S. companies, would provide an indication of what is happening in the private sector services economy. It was 51 for September, a 0.3 increase over August 50.7, in line with expectations. But the issue here is some of the numbers that are coming out lower than expectations or in a declining arena. That's why we've seen such volatility in the markets. In the initial jobless claims, 219,000 individuals that filed for unemployment benefits for the first time, 4,000 more than the previous week, which was revised slightly higher from 213 to 215. The higher the number, the worse the news. So that's the way that works. So we want a low number there. Remember that unlike some other reports, again, the lower the number here, the better. We want to see less people being laid off. Now, we're going to get a big jobs report tomorrow. That's going to be the number that everybody's looking for to see what the story is of the economy. What we want to really be looking for, though, and I'm going to share something, and most of the economists are not saying this. I'm going to tell you something a little bit different than what you're hearing from most. So the estimates are for 150,000 jobs created, not a big number. Last month it was 130,000. We're looking for an estimated unemployment rate, 3.7%. Last month, 3.7%. So here's the issue. The issue is that the small business, the household survey report, showed about 500,000 jobs added last month. That's not a number that's readily reported anywhere. We're looking at that and saying, okay, eventually those numbers are going to come into the marketplace. When those numbers come into the marketplace, we may see that the numbers are actually higher than were anticipated, and that number is going to come through at some point in time. Can't tell you when. I'm just telling you that at some point in time, that number will be added to the jobs report. So I just want you to be aware of that. I want you to see what's going on there and be able to understand that that's just kind of where the numbers show up. We want people to understand that the numbers come in, and as they filter through, that's where we're going to see them. Now, what does that mean to you? Well, as if we have a weak report, that signals more of a confirmation of the recession that we've been talking about. Yeah, we've been chatting a lot for quite a bit about recessions in the marketplace, and that the recession is coming. We could, for all we know, we could already be in it, because the definition of a recession or an economic slowdown is 2 consecutive quarters of negative GDP. We have not seen 1 quarter of negative GDP yet, but you never know until you have 2 consecutive quarters, until it's already been there. So we're already seeing that manufacturing is slowing down. We're seeing that service sector is slowing down. We're seeing that the freight movement is slowing down. All of those numbers are indicators that there is some slowdown in the marketplace. So I just want you to be aware of that. Now, how do you play that? How does that affect you? Well, the way that affects you is everything there has to do with what's going on in the bond market. Because we spend a lot of time talking, and again, we're in the Mortgage Minute right here. We spend a lot of time talking about the bond market, what you can do for your family, how you can help your family. Well, if you're trying to help your family with the largest debt most of us have being a mortgage, the largest asset most of us have being your home, well, what you want to do there is take a look and see how your mortgage is. Now, I just had this conversation with somebody last night. Very, very educated individual that we were chatting with. And the conversation was along the lines that, what does it matter what the interest rate is on your home when that is one piece, albeit a large piece, of your household debt structure. So when you're looking at your household debt structure, that's going to take in your mortgage, your car payments, student loan payments, credit card payments, any home equity lines of credit. All of those things get filtered in. Now, I've got a calculator on my computer that I work with our private clients on, and I go through all those different numbers, and I'll say, well, you know something? Yes, you do have a 3.5% first mortgage interest rate, and that's a great interest rate. Although we did see from Freddie Mac today that they did announce their mortgage rate today, like they do on every Thursday morning, 7 o'clock here on the West Coast. 3.65%. 3.65% is the Freddie Mac number today. Yes, you have to pay about 0.6% to get that. Last year it was 3.71, so it was over a full percentage point higher. So say you've got that 3.5, but when you add in the home equity line of credit because you didn't want mortgage insurance, and you add in all of your other costs, all of your other expenses, well, now you see you've got closer to a 5% blended weighted household interest rate. Right? So when you've got that blended household weighted interest rate, that becomes a significant difference. That's the only number that really matters, is what is your blended rate? Because that's what's going out of your checkbook every month, going to all those different payments. Now, if you restructure that, even if you go down from a 5% to a 4.5%, which you probably don't have to pay that much right now, but again, I don't know your unique situation. But if you had to go down to, say, 4.5%, even though you're raising your interest rate on your home from 3.5 to 4.5, you're lowering the interest rate on your household by 0.5%. You are saving money. Now, I get it. You're going to say to me, well, Ron, I don't want to take my car payment that's got 6 years left and pay it off over 30 years. That wouldn't make any sense. Well, we look at that. We say, well, if that interest rate is at 6.99 or 7.99, you're going to be saving money. We'll talk about how to convert that in a minute. You're taking that student loan payment at maybe 7.5. You're taking that credit card payment that's 9%, 15%. I see them as high as 29%. You're blending all of those in. When you blend all of those in, if you're able to be making the payments on them today, why not make the payment on them with a restructured loan? What that does for you is that's going to take that 30-year loan, that new 30-year loan with a higher interest rate, and bring that down to a lower number. When you bring that down to the 30 years, might bring it down. I've seen sometimes where that's come down to 17 years because of taking and blending everything in and taking all that extra interest that was going to some bank or credit union or finance company, car company. You're taking all that and applying it to your mortgage principal. Well, now you've taken maybe you've already been paying on your mortgage for 2 years at 3.5%, but the entire mortgage now comes down to a 17-year mortgage because you're making an extra principal payment every single month on that whole debt. So there's a lot of strategies in there. We like to point those out to you to get you all the greatest information, the most current information, because you can't make an educated decision when you don't have all the facts. We'll give you all that. Our private clients get all of that in a graphic format, so you can actually see what the break-even point is. Where is it that it makes sense for you? And one of the things I've shared many, many times on radio, there are many, many items that go in. I think it's 37 items go into your interest rate. But one of the largest items to go into your interest rate is what the type of loan? Are you getting a purchase money loan? Is it a rate and term refinance? Is it a cash out refinance? Well, cash out or investment property, second home, cash out adds about 0.3% to the interest rate. Okay, so now how do we manage that part of it? Well, what I say to you is increase your current interest rate by just a little bit. You increase the current interest rate usually by 1/8 or 1/4 Well, then you can do a completely no-cost loan. It costs you absolutely nothing to do the loan. Why would you want to increase the interest rate? Because then what the goal is 6 months from now, a year from now, as I have forecasted, many others have as well, interest rates will continue to drop. If our forecast is correct, interest rates continue to drop. You just did a cash-out refinance to save you a bunch of money. And a private client just funded this morning, saved about $500 a month, and we're doing exactly what I'm sharing with you. So they're saving $500 a month after we've already increased the cost of the interest rate. And 6 to 12 months from now, if interest rates continue to fall as we have forecast, we'll refinance again at another no-cost loan. They don't care. What does it matter to them if they continue to send us updated bank statements and pay stubs in a year from now and give us a whole bunch of autographs? I don't know about you. Nobody pays me for autographs. But you get to pay a bunch of autographs, and all of a sudden your payments go down again. And you continue doing the same thing. Now with the savings on that new loan added to the money that you saved on the first loan, continue making that a larger payment again on the new product, and you're going to be significantly better off. Just throwing that out to you because you are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, signs the housing market is on the rebound. How does a HELOC affect your credit score? Steps to pay off debt with credit card balance transfer, all that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details. 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender. Licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. you still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com, or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. If you already found your dream home, text SLT Home Digest to 79564. Find out what the market knows about your property. Find out what you're really doing there is you're going to find out what does the market know about your property, and what does the county recorder have on file about your property. So you're going to text SLT Home Digest to 79564. You can see it right there rolling along the bottom of the screen for those of you watching on RonSiegelRadio.tv. 3 signs the housing market is on the rebound. The residential real estate market has been plodding along for most of the year. However, 3 recent reports showed the market may be on the verge of a rebound. Number 1, the existing home sales. Closed sales are up, making 2 consecutive months of growth. Number 2, pending home sales. Contracts signed are up, with each of the 4 major regions reporting both month-over-month growth and year-over-year gains in contract activity. Month-over-month growth, the Northeast rose 0.7%. The Midwest increased 0.6%. The South increased 1.4%. The West, 3.1%. Number 3, buyer traffic. The number of people shopping for a home is up compared to the same time last year. And for the first time in 13 months, the Northeast is up 5.9%. The Midwest increased 1.3%. The South is up 2.7%. The West grew 2.2%. In their most recent report, Showing Chief Analytics Officer Daniel, I can't even say, Cherkasky explained, quote, "The trend we saw in year-over-year buyer traffic in previous months continued across the United States for all 4 regions. There were more showings per listing this year compared to last year, making it the most competitive August in the last 5 years," unquote. Lawrence Yoon, chief economist with the National Association of Realtors, believes the uptick in activity will continue into the future. It's very encouraging that buyers are responding to exceptionally low interest rates. With interest rates expected to remain low, home sales are forecasted to rise in the coming months and into 2020. Bottom line, if you are thinking of purchasing a house, selling a house, give us a call, 800-306-1990, 800-306-1990. No, I do not sell properties, but I do have the information on it, and I am more than happy to share whatever we know with any of you, just so you can basically find out what the truth is. There's a lot of noise out there. We've told you right along, there are certain institutions that make all their money by giving you the most negative information they can possibly find. If they can find it and it's negative, they're going to share it, whether it is really accurate or not. Sometimes they're doing outlier data. They're providing outlier data. And this drives us nuts when we want to be out there giving you the best data possible, and you're getting outlier data from others. You know, it's just not the right thing to do, and we just don't believe in doing that kind of stuff. And we want to bring that information to you. Again, that's the real-time real estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. And if you have that dream home, again, don't forget SLT Home Digest. Text SLT Home Digest to 79564. You can find out what the county recorder knows about your property and what the market thinks about your property. Both of those tools are totally free. One of my favorite words. I love free. What else is going on in the markets today? Tax-friendly states. That was one of the subjects we wanted to share with you today. I always love looking at some of the states that are tax-friendly, that are not tax-friendly. We always watch some of those. Obviously, the blue states, they're the ones that are getting hurt the most when we're watching what's going on in the marketplace. A lot of these blue states, that would be, yes, California, New York, New Jersey, they're upset about the fact that the courts have said, you know something? The federal government has the right to tax, and the federal government has the right to determine what the deductions are. So we did see just a couple days ago, a judge dismissed a challenge lodged by some of these blue states that aim to have the $10,000 SALT cap deemed unconstitutional. Now, why would it be unconstitutional to put a limit on deductions? Right in the Constitution, it says that the federal government has the authority to tax. But I guess certain states don't like that idea. They want to change the rules. Cap has led to an out-migration of residents from high-tax states like New York and New Jersey to states where the liabilities are much less onerous, like Florida. Experts have argued that the court ruling might push even more taxpayers to leave while discouraging others from moving in. Independent non-profit Taxpayer Research Institute, Florida Tax Watch, recently analyzed Commerce Department data to determine which states have the highest per capita state tax collections. The average per capita state and local tax collection in the U.S. as of fiscal 16 was $4,956, though some states collected much more or much less. Look at the states with the highest per capita state and local tax collections as of 2016. New York, 9,000. Connecticut, 7,000. New Jersey, 6,700. North Dakota, 6,600. Hawaii, 6,400. Massachusetts, 6,500. Minnesota, 6,100. California, 6,100. Maryland, 6,100. Vermont, 5,900. According to the report, states with the lowest state and local taxes collections per capita, very lowest in the country, Alabama at 3,200, Tennessee 3,300, South Carolina 3,500, Oklahoma 3,500, and Florida 3,500. We've talked about all these numbers in the past when we look at the website howmoneywalks.com, howmoneywalks.com, and that's where we basically get the data that we've shared with you many, many times about the states that are gaining money, the states that are losing money. California, one of the biggest states to lose wealth. So how do we determine the wealth, though? And that's one of the issues that we're constantly looking at. Wealth is based in this particular scenario goes on adjusted gross income from tax returns. $58.63 billion is the average number from 1992 through 2016 that has left the state of confusion. That would be, yes, Taxifornia. Orange County loses a lot. Los Angeles County loses a lot. San Luis Obispo, they gain a lot. People are moving to Sonoma County. They're moving into Marin County. Where's the money coming from, though? It's not that the people around the country are saying, you know something, we want to move to California. Money's coming from other high-tax states, New York, Illinois, New Jersey, Massachusetts, Michigan. That's where the money's coming to. Where's our money going to? Nevada, $14 billion on average. Arizona, $9.6 billion. Texas, $9.3 billion. Washington, $7.3 billion. That's where the money from California is coming from and leaving based on adjusted gross income. So you can say all you want about how great it is in California and how you can keep raising the taxes on the wealthy. But the fact of the matter is the wealthy are not going to keep paying the taxes. The wealthy are saying, you know something, we're out of here. We're not going to pay the taxes of California. It's not going to continue to happen. We're going to leave. We're going to take our money with us. We're going to get out of the state. Maybe we'll keep a second home here. Now, there are a significant amount of laws that you have to follow to make sure that you are doing what you're supposed to do. But the issue is very simple. Money is continuing to leave, and we want to just make sure that we're informed, right? I mean, there's many people that have many reasons that they're staying in California. They love the weather. They love the proximity to the beaches, the mountains, and the desert. I get it. Families here. But the people that have wealth, they can fly in and out, right? So we got to really look at that. When we continue to penalize business for being in California, these people are taking their money out of here. You listen to the hypocrites in Hollywood. They're constantly talking about the idea that that we should tax more. But isn't it amazing that they won't do movies in areas where they tax more? They take and do the movies and they do their recording in areas that have lower taxes. They have a house in California because they love it here. They go and work somewhere else, and then they have their primary residence in Florida or Texas where they've got lower taxes. So they're paying their property taxes here. They're paying their sales tax here. But a lot of the other taxes, they're not paying. And they certainly aren't paying the gas tax because they went and bought a Tesla. Or they bought another luxury vehicle that doesn't have the same tax liability. Just showing that to you, just giving you the information there, because you are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, how does a HELOC affect a credit score? 6 steps to pay off debt with a credit card balance. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRE NMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by creditsanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer has the solution for you. Our friend Jeff Sipes and the Blue Water Credit team, they're the ones that have all the information here. Jeff Sipes, Blue Water Credit, they take care of our Credit Sanitizer group, and they do a great job helping people with getting their credit reports corrected. And that's a big issue. Corrected is not the same as doing some bogus things where that's not mine or other items that are not quite honest, not quite straightforward. They understand the laws and the laws that affect your credit. When the law is adhered to and your credit report is accurate, and I've never seen one that's accurate, so yours isn't either, right? I've been looking at credit reports for decades now. Everyone, I've saw 850 is a perfect score. Never seen an 850. I had somebody tell me the other day that they have an 852. I said that's not a FICO score because 850 is the top score. I did have a client with an 834, and there was about a half a dozen errors that I saw just quickly glancing at his report. So they've all got errors. Sometimes it doesn't matter. If you've got an 800 score or 800 plus, the fact that there's errors on there doesn't really matter. It's not going to mean a whole lot to you. But Jeff will get it corrected in his team. How does a HELOC affect a credit score? HELOC, home equity line of credit. Yes, many people have those. Great tool to use to avoid private mortgage insurance when you're buying a house. There's other strategies we use those for. But the home equity line of credit, HELOC, can have an impact on your credit score. Whether that impact to your score is negative or positive depends on how you manage your HELOC. Also depends on your overall financial situation and ability to make timely payments on any amount you borrow via your home equity line of credit. Find out more about how a HELOC affects your score. Let's continue on. So again, HELOC stands for home equity line of credit. If you have equity in your home, you can use it to take out a line of credit up to that value. Whether or not you're approved for a HELOC depends on your credit history. However, a HELOC is not a second mortgage. Unlike a mortgage, you can take out money from your HELOC as you need it, using only the amount you need and paying your loan back in a revolving manner or in monthly payments. Works a lot like a credit card, but with a larger available credit limit. For example, if you have $40,000 in equity and get approved for a home equity line of credit, for the total amount, you can take out up to that much in funds, $40,000. You might take out $10,000 to put siding on your house, to do a new, fix up your roof, to do some other repairs. Begin paying back that amount accordingly to your lending agreement. Later, you might want to cover some of your child's college tuition using another $5,000 of the HELOC. You continuously pay back what you borrowed on the equity line unless you have paid back all of the balance. It's important to note that a HELOC is credit that is extended based on your home's value. That means if you default on your home equity line of credit, you take out money and never make the required payments, you could eventually be dealing with a foreclosure situation. How is a HELOC different from a home equity loan? Well, HELOCs and home equity loans do share some similarities. In both cases, you'll be taking out a loan from your home equity. But while your home equity loan will give you the money all at once, a HELOC gives you a set amount of money as you need it that you can borrow and pay back. Home equity loans are similar to any other loan. An equity loan you take out will have a fixed interest rate, a lump sum, etc. On the other hand, some equity lines of credit do have an interest rate, but they're typically lower and only applied to the amount of money you take out. Is a home equity line of credit a good idea? Whether or not any type of credit is a good idea depends on your personal financial situation. Easy answer, it depends. If you're drowning in debt and using your home equity to pay the bills, you're just swapping one type of financial issue for another. But if you're using your HELOC to pay off high interest credit card debt, so you only have a single payment, lower interest debt to worry about, might be a smart move. We can talk about that. You can give me a call at 800-306-1990. We can do a whole review for you. Only you can make that final decision based on educated information. However, if you have poor credit score or other negative factors, you may not get approved for the HELOC, or the HELOC may come with unfavorable terms that make it too expensive to use as a form of credit. You may want to work on fixing your credit before applying for the home equity lending. Any type of credit you use can impact your credit score. When you take out a HELOC, you extend how much available credit you have. If you open the line and don't use any of the credit, your credit utilization will be improved, which could also potentially improve your credit score. If you make timely payments and credit you borrow from this equity line, those are positives that can be reported on your credit history. On the other hand, if you take out a large portion of your equity line, you have a higher credit utilization rate, which can hurt your score. Failing to make timely payments could also potentially drop your score. Since HELOC rates can be variable, you must plan for fluctuating payment requirements to avoid that issue. Do unused credit lines hurt your credit score? Unused lines of credit typically improve your utilization rate, which would improve your credit score. However, HELOCs are a type of revolving credit, just like a credit card. If you have a huge amount of unused credit, some lenders might see you as a potential risk, especially if you don't have the income to back up this credit. This is because you could suddenly take out a large amount on this equity line without the income to pay it back, putting your other debts at risk too. What are the benefits of the HELOC? Just like any other loan, there are pros and cons to taking out a HELOC. The benefits of a home equity line of credit include the ability to get a large line of credit, but you have to manage it. You can use it as you need it, which gives you more control over what type of payments you need to make at any given time. It also gives you some background. It gives you some information there that you're able to use, or some safety net is what I was trying to get at. Safety net that you can use. Biggest disadvantage of the HELOC is it's tied to your home, which means there's a slight risk of foreclosure or a home lien if you don't make your payments. The payments may also work on variable interest, which means this isn't always the most affordable credit option for homeowners. It can also look like a large credit card account on your report. So if you only need a small amount of credit on a short-term basis, you might want to consider personal loan options instead. There are various issues there. You just want to make sure that you get the right one at the right time. That is the Your Credit Matters segment, again, brought to you by creditsanitizer.com. Jeff Sipes and his team there at Blue Water Credit, they are the ones that help with that. You just need to give them a call. That's the bottom line of that. Creditsanitizer.com. They've got all the information to help you out. Let's take a look at, there was one other issue that I've been getting a lot of inquiries about, and I wanted to address that one today for you as well. The inquiry there was on balance transfers, and should you use a balance transfer? When is the right time to do that balance transfer? So we want to take a look at that, some steps to consider. A lot of ways to get out of debt. The U.S. News & World Report credit card expert and consumer finance analyst Beverly Harzog says, but if you still have good to excellent credit, a balance transfer credit card might be your get out of debt free card or get out of debt ticket. Here are some of the steps you should take if you'd like to do a credit card balance transfer. Number one, know the current balances and interest rates. Look for cards that offer favorable terms for a balance transfer. Make sure you understand the details of the card. Apply for the new card. Do the balance transfer within the specified time, and make sure you pay off the debt. First thing you obviously have to know is, no matter what your strategy is to pay off debt, is to make a list of everyone you owe. This list should include who is the creditor, how much money you owe, what is the interest rate, what is the minimum payment. We've talked about that when we do our debt consolidation loans as well. This will give you an idea of where you stand overall, but also how something like a credit card balance transfer could help you pay off debt faster by lowering your overall interest rate. That gives us the next step. Look for cards that offer favorable terms for balance transfer. Once you have a sense of how much you owe to whom and what the interest rates are on those balances, you can start looking for opportunities to transfer the balances to a card with a better rate. Most often, this will take the form of a limited time balance transfer offer. There are several places you can get these balance transfer cards that have a zero interest rate for 12, 18, 24 months. Make all those payments right to that one location. Try and get it paid off before the interest rates start. That way you're paying a zero interest rate on that product. Make sure you understand the details of the card, what the promotional interest rate is, what the fee is for doing the balance transfer, how long do the promotional interest rates last, what the interest rate is on balances after the end of the promotional period. Do those interest rates apply all the way back to the very beginning? Some of the cards have that, where the interest rates will go all the way to the very beginning of the time you took that transfer. Sometimes there's a 1 to 3 or 5% balance transfer fee. That may not be a bad idea if you're paying 19, 29% on that transfer. Before you fill out the application, make sure you have an accurate accounting of what your gross income is minus any recurring liabilities, child support, mortgage, all that kind of stuff. You're going to be asked for it. Do the balance transfer within the specified time. Make sure you pay off the debt. Don't just go back into debt because you got more money available to you. That is a big issue we see from a lot of people. So be real careful right there. And as always, I ask you, set that first radio preset button to come right back here. Check, favorite our Facebook page. So you come back here as well to join us every day on Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We will talk to you next time on Ron Siegel Radio.